Hey, what's up, everybody? Trader Tim, E-mini Mine. Today's actually futures rollover, Thursday, September 10th. I'm recording the video as opposed to Monday, coming off of the Labor Day holiday. We're kind of continuing our little bear flag, if you will, that is not quite so little. But a couple things I want to highlight as we kind of approach our FOMC meeting announcement that is kind of the important aspect that kind of kicks off the fall. So the meeting begins next Wednesday, the 16th, and the announcement will be on Thursday afternoon. So trade cautiously Thursday morning, a week from today, Thursday the 17th. Now you can see once we pulled back, we did rally up into the 50% short, the full 50% short at 1982s. Now today being futures rollover, it's a little bit of a tedious day to trade, both today and tomorrow as the futures contracts volume starts flowing from the current contract into the next recent contract, so the December contract. Make sure that you have your symbols correct in your trading ladder. With like Thinkorswim, you can just put /ES and it'll pull up the most recent, which today currently is the September. But so the U contract, HMU for September, Z for December. Just make sure next week when you go to trading the ES or any of the indices that you have the correct contract in your trade ladder, because sometimes you'll notice that the price on your chart may differ from your trade ladder. So check that just to make sure that you're not trading the wrong month. Now we have a very defined triangle here, and if I pull up the trend line, we can see higher lows, lower highs. Very, very clearly defined higher low, lower high, higher low, lower high, higher low. So we should be seeing some pretty massive selling here, which will take us down into the 1780 target. I'm going to go out to a larger time frame. So the target on this 50% short is down at 1660s actually. And so that's a pretty large move, over a 200-point move here on the ES. You'll notice that we have this prior swing low back here at 1810s. That will be a very important swing low, just like the hammer that we have at 1830s, as well as the swing low back here at 1730s. So you'll notice that on the weekly chart, we have not broken the hammer either above or below. We're just trading inside. So just like, let's see if I can find an example here. Just like on the daily chart, where's a good example? I guess here, the daily chart where we have a big body candle, a couple of inside days, and then we break above that initial candle as kind of a signal bar. We've got the same thing going on in the weekly chart, where the weekly hammer is followed by a couple of inside bars. So if we do break to the upside, I would look for us to be breaking 2018s, have some resistance up here at 2035s, maybe looking for some short opportunities because these are prior lows. You'll notice that where we've stopped here at about 1990s kind of lines up with prior lows. Especially if you take out the tails here, you have a very, very strong, almost exactly horizontal trend line. If I do this from the lows to the highs, right about that 1990 level. So some very strong resistance here, and you'll see as today, we came up and immediately sold off once we touched that 1990 level again. So a lot of pressure at this point to the downside. I'm gonna actually pull up. Let's see if I can do a monthly chart. Let's go big. 15-year monthly and see what we've got. So this is actually the first time I've looked at the monthly chart in about a couple of weeks. So we've had a couple legs higher with some, somewhat healthy pullbacks. They can kind of, because a pullback establishes the swing low. So when we talk about breaking a swing low, we're breaking a prior pullback, in this case because we're in an uptrend. And you can see the recent uptrend is pretty much straight up. There are really not, we've got two somewhat consecutive down days, down months rather up here, but another two back here. Really, we have to go all the way back to May of 2011 well, 2010 over here to see consecutive months or an actual downtrend. So that's certainly what we could be seeing here. As you see, the monthly candles highs are about the same in terms of moving sideways for a couple of months, and that was basically the summer session, which can indicate the rollover, breaking the swing low, all of these things kind of lining up. Back here we have the 1580 highs. That would be a long way for us to go, but it certainly wouldn't be out of the question for the short term in terms of the next, I would say, couple of weeks, and certainly going into next week's Fed FOMC meeting announcement. That'll be a very telling day as to what the trend may be from now until December. So we'll be looking at the swing low and looking at what the FOMC has to say in the meeting announcement to kind of dictate some ongoing larger trends. In the meantime, I'm not really looking to take daily levels in here. You don't want to really be taking 50% longs and shorts when we're in a very triangle type or choppy conditions. So, if we draw them up, you can see the short below us, but I'm not looking to take, you can see the long below us, but I'm not really looking to take 50% in the middle of this range because we're up at the short and then we're down at the long. So, taking a 512 tick setup, a short at highs, or a 512 tick setup long at lows is certainly a better risk opportunity because you can take a 1911 up to a 1980 or vice versa. Take the short down to the long, and you can do that within the trend. But at this point, because the apex is getting so tight, I'm looking for us, maybe as soon as the next week or the FOMC meeting announcement day itself, I would expect some extreme volatility and some extreme sharp moves just following the FOMC meeting announcement. And if we do look at the VIX, though, it looks awesome. We've got mid-20s right here on the VIX. Great, great, great trading environment. If you look at a 512 tick chart or even a 15-minute chart, there's a whole lot of opportunities presenting themselves both on the ES and the Euro. The next day or two, just be cautious of the contract rollover, and we'll do another video on Monday, kind of taking us into the FOMC meeting announcement, look at a few trades. Tuesday, I've got a webinar with Infinity Futures. You can tune into that. I believe that is 3:30 Central Time. I'll put a link in the member dashboard. And as always, feel free to shoot me an email with more questions. Tim@eMoneyMind.com.